Welcome to TradeTheMBI.com. This is John. This report is for the 16th. Not a surprise we moved a little bit higher, but faded off that. We're still in the positive elements within the MBI readings, and shorts, not a whole lot of activity at all. I mean, it's pretty insignificant reading, and with green DOC well above cyan under red. All those are green lights. That doesn't mean that we aren't going to get some pullback, because usually within this broad range, you can get as much as 50% pullback and still be within positive elements of it. But the lack of any significant downside news, keeping things in a relatively healthy stance, so to speak. NQ, from its standpoint, still doing a little bit better than the S&P, but overall, just getting close to reaching those July highs. Almost there, hasn't quite done it yet. And then shakeout much stronger from that standpoint, from a Nasdaq view. And interesting that the MBI readings are a little bit more separated. We're seeing here now at the start of the market getting a little bit closer, but still above that 33 level, which is sort of that trigger point where you would potentially see more softness. When we look at from a treasury standpoint, still holding right in this middle range, nothing too dramatic. Still puts it closer to where the Fed is as opposed to where the market had moved before. And again, I think that a lot of that's going to be data driven and or any world events. But at this particular stage, things have been relatively soft. So not really seeing a whole lot. And without oil doing anything from an upside standpoint, that just takes pressure off and just adds more mobility, I think, to the market from an upside potential, because it eases off this real inflationary pressure that had built up before, while it's going to take as much time for it to continue to soften out. It makes it so that things can be absorbed, and it's literally what the market looks for. Nothing that's upsetting the apple cart, but still soft enough that it's not really pressuring the Fed to do anything from an upside standpoint. And potentially the idea being is that if things continue to just soften enough, the Fed will have to back off and neutralize itself. From a gold standpoint, still holding relatively modest. There's a lot of upside potential to these things should anything on the world scene go wrong, and that really becomes that relative factor. We had Bitcoin fill in a little bit of the positive extreme there back to the 76, and then immediately jumped right back from there, and that's all pretty consistent with what we're seeing from that DOC. No question that that's super positive. And ETH has performed a little bit to the upside, a little bit slow in my response here from the computer. Not sure what that is from the dedicated server aspect, but ETH still upwards of its highs and above that 76%. And again, we had the dip below the negative 13.5 on DOC, and once that comes back up above it, you get the turnaround of a more positive push going there, because otherwise it's effectively coming from the top side down. And when we flip over to our 50K, the long position took the exit as we saw a little bit of fading from DOC standpoint. We ended up with a little bit of a DOC spread here right at the middle part of the day, and it hasn't been too dramatic. And oftentimes what we'll see from that is when we get to the high, you get that DOC spread and a little bit of a retrace that tries to push back up. We did have MBI white lead, and the expectation on that would be a move towards the 50%, but you'd have to have magenta under yellow for that. So the likelihood is that you get a second or even third MBI spike that would cause that pullback within that range, and we haven't seen that as of yet. But intraday, when we're looking at, it's really slow. So got a 5,000 tick bar. So finally getting the tick charts to try and work their way back up. It makes a big difference from a reading standpoint, because then we're only looking at bars and we're not looking at time. And you can see normally when we look at that 5-minute chart, there would be like, a ton of bars. Here you can see how much smaller that volume really is when you're talking about the construction of actual 5,000 bars. So it makes a big difference this way it looks as well from a signaling standpoint too. A lot cleaner from that standpoint, because you get less noise. But overall, just back and forth action, which I think is relatively clean, healthy. So we're not looking at any traumatic stuff. There is plenty of concern out there, but the reality is that concern hasn't turned into negative output. And whenever that happens, this is where you hear, the fear climb, where yeah, there's plenty of things to be worried about, but in the absence of actually anything happening, the upside trade is still the primary direction. So this is where any unexpected news really becomes critical, because as it is now, the market has got its set plan for trade, and it's just a matter of us following the indicator readings. And right now, that's still a positive bias at this particular stage. So continue to go with what the readings are. As always, though, if anything dramatic changes, certainly let you know on the Skype chat. As always, though, trade well. We'll talk to you later.